Yeah, welcome to another video. So in today's video, we'll be looking at how to compute national income. So here is the question on national income. The given information below, the amount is in naira and million. So you can see it up here. So don't mistake that. And we are given the net income from abroad, gross domestic product, indirect business tax, consumption of fixed capital, company tax, personal tax, social insurance contribution, undistributed profit, transfer payment, subsidy. Now we are required to calculate the GNP, NNP, NI which is the national income, PI personal income, PDI which is the personal disposable income. Let's start with the first one. Solution. The first one is the GNP. And we know what GNP means, gross national product. When we talk about gross national product, is the total income or total output in monetary value that is produced by nationals of the country. So those national can be within the country or outside the country. Therefore, to get our gross national product, what we usually do is that we add our income from abroad to the GDP, which is the gross domestic product. So we have the gross domestic product plus income from abroad. Therefore, we are given the GDP, which is the gross domestic product, to be naira 101 million plus the income from abroad, that is minus naira 2.5 m. And when you multiply this together, it's going to give us minus, right? So we have naira 101 minus m minus, so let me write this, m minus naira 2.5 m, and this is going to give us, that is 98.5 m. Let's look at the second one. Required to calculate the NNP, which is the net national product. The net national product. And we know that net national product simply means that the GNP, which is the gross national product, after allowance have been made, the result after allowance have been made from the GNP, which is the gross national product. Let's put it in that way. That is the gross national product minus or less depreciation, which is also known as consumption on capital assets. So let's look at that. Let's look at the given information. We have gotten our GNP, right? Are we giving consumption of fixed capital? Is also known as depreciation. So we are giving it to information. Therefore, we can go ahead by saying that this is equals to GNP minus consumption of fixed capital. So our GNP, that is 98.5 m minus 17 m, and this will result to, so 98.5 minus 17, that is there are 81.5 m. So I've gotten the second one. Let's move to the third question, or the third things we have to calculate, which is the national income. National income. Now, to calculate our real national income as cost price or factor price. Yes, national income as factor price. After we might have calculated our net national income, there are certain adjustments we need to make. and the adjustment requires sometimes the government can give subsidy, so we add subsidy to it, and some indirect business tax. So all those tax that has been charged on a product before it was sold or being produced are called indirect business tax. So all those tax we will need to deduct it, therefore we will get our national income. So we can say that this is equal to the net national product plus subsidies minus indirect business tax. You can write this as NI is equals to the value for our net national product, that's 81.5M, plus subsidies. We are giving subsidy to be naira 2.0 million, which is 2 million. Then minus the indirect business tax, that is naira 10.2 million. So the result for our NI is going to be 81.5 plus 2 minus 10.2. So this gives naira 73.3 million. Now let's move to the fourth question. We have to calculate the personal income. Personal income. So personal income is also known as PI. Now to calculate the personal income, we can calculate the personal income by saying that our national income, then this our national income, there are some profit that are not distributed to the shareholders, right? We need to deduct it minus undistributed profit. Also, sometimes we engage in social activities. Social activities is not part of income, right? We need to deduct that minus social insurance contribution. Also, transfer payment. Transfer payment are payments that you receive but not from productive activities, you did not work for it, like money given to a beggar is example of a transfer payment. So that transfer payment you need to add it because it's part of your income too. Transfer payment. Then company tax will be deducted minus company tax. So we are going to have our PI to be starting with the national income, which is there are 73.3 minus undistributed profits, that is 2.6. Then we have social insurance contribution minus 3.5. Then transfer payment, which is naira 2.4. Then minus company tax, that is 1.1. So PI is equal to minus 2.6 minus 3.5 plus 2.4 minus 1.1. So this gives us 68.5, which is our personal income. Then the last one, disposable income. Personal disposable income. So we know what disposable income means. When we talk about disposable income, these are income that is left for an individual to spend and save after the deduction of personal income tax. So what you just need to do is to look for our personal income. So it simply means that our personal income minus personal income tax. So we are going to have our PDI. So I will call this PDI. Our personal income, that is 68.5M, minus personal income tax, personal tax, which is 1.5M. The result is going to be naira 67M. So this is our final answer now. So we have come to the end of the video. Thank you for watching. Please don't forget to like, share and subscribe to my channel. Bye.